the next revision that we are taking up is in relation to chapter number 8, that is called audit report chapter. Okay, very nice chapter, very easy chapter. Chapter which has proper segregation. Segregation important क्यों है? Because if proper segregation is there in place, then it is easy for you to remember कि किसका आंसर क्या है. ठीक है? So let's go ahead with the revision of this chapter. Okay, so let's go for it. Please here, let's understand. Now, first of all, we are going to enter the standards. That is your 700. You have 701, 705, 706, and 710. These are the standards which are there in this chapter. After we complete standards, we'll do the two separate topics that are there in this chapter now in the new course. You have the joint audit part and you have the branch audit part. Okay, joint audit bhi hai, branch audit bhi hai. Again, two very easy areas. And after this, we'll be doing the last area that is in relation to CARO. So you have CARO 2020, which is there. Okay, so we'll be covering this area. So step by step karte ekdam achhe se, and so that you are also getting a proper grip regarding this chapter number 8. Chalo dekhte abhi yahan pe pehle. First, we'll enter the a quick recap point in relation to SA 706 pehle kar lete hain. So we'll do the smaller ones first. What is SA 706? SA 706 is nothing but emphasis of matter paragraph and other matter paragraph. Now, whenever the management has prepared the financial statements properly, management की यहाँ पे कोई भी गलती नहीं है, management has given the financial statements in a proper manner, but the auditor is of the opinion that it is fundamental to the user's understanding to highlight some point that the management has given in the notes to accounts. तो अगर यहाँ पे ऑडिटर को कुछ हाईलाइट करना है रिगार्डिंग द फाइनेंशियल स्टेटमेंट्स, रिगार्डिंग फाइनेंशियल स्टेटमेंट के बारे में अगर ऑडिटर को कुछ हाईलाइट करना है यहाँ पे, देन द ऑडिटर विल गिव द हाईलाइट एज पर योर SA 706. देयर इज अ पैराग्राफ कॉल्ड एज एम्फसिस ऑफ मैटर पैराग्राफ. Second, if the auditor wants to highlight to the shareholder something in relation to the auditor's work, that is auditor's report, auditor's responsibilities, or the audit, okay, in that case, the auditor will highlight using something called as other matter paragraph. Remember, 706 will only come if that matter, that particular matter is not covered in modified opinion, and that particular matter is not covered in the key audit matter paragraph. अगर कोई मैटर यहाँ पे 705 मतलब मॉडिफाइड ओपिनियन है, या तो फिर अगर वो मैटर, सॉरी फॉर दैट, वन सेकेंड, अगर कोई मैटर यहाँ पे 705 के अंडर कवर हो रहा है या तो 701 के अंडर कवर हो रहा है, then that matter cannot be a 706 matter, cannot be a 706 matter. Simple. You have to keep this in mind. Okay. Now 706 का other matters also there, which I'll explain to you when we do the answer one by one. But this is the brief concept. What is 705 now? 705 is modified opinion. Whenever the auditor is giving a qualified opinion or an adverse opinion, if he has obtained sufficient appropriate audit evidence, and if he has not obtained sufficient appropriate audit evidence, then the auditor will give a qualified opinion if the matter is, if the possibility of material misstatement is there and the matter seems that it is not pervasive, the auditor will give a qualified opinion. And if the auditor has not obtained the audit evidence and the matter, the auditor is guessing that material misstatement can be there, and if it is pervasive, then the auditor will give a disclaimer of opinion. So whenever the auditor gives qualified report or an adverse report after obtaining the audit evidence, or if the auditor has not obtained audit evidence and the auditor is giving a qualified opinion or a disclaimer of opinion, we call it as a modified opinion or a 705 matter. Okay. What is 706? 701, sorry. 701 is called key audit matter. So out of the communication that you have done to the TCLOG throughout the year, out of those matters, which are the MSM, that is most significant matters that we discuss with TCLOG, when you collect it at one place and show it to the shareholders, when you collect it at one place and show it to the shareholders, that matter is called key audit matters, and it is covered in the key audit matter paragraph. Okay. Next is SA 700. 700 is the audit report format, the format that the auditor follows. And 710 is a very nice standard, very important standard, that is comparative information, corresponding figures, and comparative financial statements. Okay, it is covered in this manner. That is your 700, 701, 705, 706, and 710 in a gist what it is. Okay. Now let's go for it one by one. Now we'll go in the order of 700 first. Okay. Now 700 is what? One second. Okay. In 700, the auditor is forming an opinion. The auditor is forming an opinion, and the auditor is giving his opinion through a written report. Auditor is giving his opinion through a written report. Okay, so that is the objective of SA 700. Next, I have said here that the auditor here shall form an opinion whether the financial statements are prepared in all material respects and as per the applicable financial reporting framework. Next, I've said here that evaluation by the auditor, what all should the auditor evaluate? Auditor will evaluate whether the financial statements are prepared as per AFRF, whether qualitative aspects of the entity in relation to the accounting practices, and if there is any possibility of management bias in the management judgments. That is what the auditor will check. Auditor will also do his specific evaluations. For this, there is a code called paid term. Very simple. First P is whether the presentation of the financial statements is cure. Cure is what? Comparable, understandable, relevant, and reliable. After that, you have whether the accounting policies are adequately disclosed, whether accounting policies are consistent or not, and whether accounting estimates are reasonable or not. That is what the auditor is checking here. Auditor will also see whether there is adequate disclosures to enable the intended users to understand the effect of material transaction and events on the information conveyed. Finally, the auditor should check whether management has used the proper terminologies. In the financial statement, you cannot call cash flow statements as cash in, cash out statement. For that, cash flow statement is a proper name. So the name that the company should also use is cash flow statement. Also, company cannot call balance sheet as list of balances statement. No, the name is properly balance sheet. You should call it as balance sheet only. That is basically called terminology used. So auditor will check that. Simple. That is in relation to what? Specific evaluations by the auditor. Let's go further. Now we understood this matter, that is general purpose financial framework and your compliance framework. So what is the difference between these two? So first is general purpose financial framework. General purpose framework, which is basically your fair presentation framework. Okay, fair presentation framework basically means there is a benchmark. Based on that, you are making the financial statement. A simple example can be you are making the financial statement in accordance with Indian accounting standards or Schedule 3. So you are basically making the financial statement as per AFRF. So whether it is properly made as per AFRF, that is called fair presentation framework. Okay. So you are comparing your financial statement with the fair presentation framework, that is your AFRF, and comparing whether it is proper or not. So you have something to compare with. Now, what does compliance framework means? Compliance framework means a client has given you some work and the client has given you some format and the client is telling you, please ensure that please just compare whether in our organization everything is as per our policy or not, of the things that we have framed here. That is called as compliance framework in this case. Okay. So compliance framework does not contain any what do you call any comparison with something that is already as per the law. It is as per some contract that you're getting the work. That is called compliance framework. Okay. Now let's go to the next part, that is in relation to forming of opinion. Opinion can be unmodified, as you know, that as a clean report, or it can be modified opinion also. Modified opinion, as you know very well, after reaching the R level, you feel that material misstatement is there, or if you're not able to reach the R level and you are not in a position to comment whether the financial statements are free from material misstatement, that both these are modified opinion. Modified opinion, as you know, is nothing but 705, and 705, as you know, contains 4 statements. One of these 4 uh, statements or reply if you give in the auditor's report, these are called modified opinion. Those are qualified opinion, adverse opinion, disclaimer opinion, and qualified opinion when you have not reached the RA level, basically. Okay, let's go further. Now this is the audit report format. You have title, then you have addressee, then you have opinion paragraph. Okay, opinion paragraph. Then you have the basis for opinion here. Then you have the going concern paragraph here. After that, you have the key audit matter paragraph. Then after that, in key audit matter, you have different areas which are there in place already. Okay, so that we'll see. Then after that, you have the next area, that is in relation to the auditor responsibilities in the auditor's report. So what all is the auditor concerned with? So regarding that also we have seen. Then after that, you have the next last simple areas in relation to the location of the description of the auditor responsibilities, the date of the audit report, the place of the audit report, the signature of the auditor's report. All these things the auditor will check. Okay, so you have the signature of the auditor, auditor's address, that is a place of signature, and the date of the auditor's report. That all the auditor should. That all we have to give in the audit report. That is SA 700. After that, you have the next area, that is in relation to SA 705. We'll do it in the flow of this flow, which is here. 705, as I told you, is modified opinion. Whenever the auditor gives a qualified or an adverse opinion or a qualified or a disclaimer of opinion, the auditor is giving a modified opinion. I think in this we have discussed fairly all the things properly. I'll just point out some key area to you. You remember what is pervasive? So it will appear on your screen now. See, pervasive. Pervasive means you have to remember a code called DINS, DINS. So you will see in the lower half of whatever you can see on the screen. You can see there first. Disclosures which are fundamental to the user's understanding, if those are missing, then the auditor will say that it is pervasive, that it means it is a big problematic issue. Second is, if the misstatements of the company are not confined to a specific element, account, or item, then the auditor will say it is pervasive in nature. Even if they are confined, if the auditor feels that a substantial proportion of the financial statement is affected, then the auditor will say that it is pervasive. Okay. Next, we have this point called disclaimer of opinion. In disclaimer of opinion, we say the auditor shall disclaim an opinion when the auditor is unable to obtain sufficient appropriate audit evidence on which to base his opinion. And the auditor will, of course, if the auditor feels that the possibility of the misstatement is material as well as it is pervasive, the auditor will give a disclaimer of opinion. So this, I think we have done it many times. Now, which type of opinion is appropriate? Now, auditor will decide this on two things. I've given that in yellow there. When the matter is materially misstated and based on pervasiveness, the auditor's opinion will change. Okay. This table we have already seen. You can see on the table on the right hand side, qualified opinion, adverse opinion, qualified opinion, and disclaimer of opinion. Also remember, whenever the auditor is giving a report as per 705, the basis for opinion paragraph will change to basis for qualified opinion, or basis for adverse opinion, or basis for disclaimer of opinion, as per the situation, as per the report that the auditor is giving. Okay. Let's go to now 706, that is emphasis of matter paragraph and other matter paragraph. Okay. As I told you, emphasis of matter paragraph, our main focus is on the financial statement, and in your other matter paragraph, it is other than those present or disclosed in the financial statement. So other than those means what? Anything in relation to auditor responsibilities, or auditor's report. That is what the auditor will give. Now, inside this, there are a lot of small answers. So first is emphasis of matter paragraph. You will not give, the auditor will not provide the emphasis of matter paragraph where it is already a modified opinion, or where 701, that is key audit matter, applies. So only when it is not a modified opinion and it is not determined as a key audit matter, only then emphasis of matter paragraph will come. Okay. So only when 705 is not applicable, 701 is not applicable, 706 will come. 706, that is emphasis of matter paragraph, will come in this case. Okay. Next. Sir, emphasis of matter paragraph will have a separate heading called emphasis of matter. If you remember in the class, I had shown you the Reliance report, which had emphasis of matter. There, we are giving clear reference to the matter being emphasized. In Reliance report, you had something called as note number 31B and note number 41.1. And finally, the auditor's opinion is not modified in respect of the matter emphasized. Okay. So these three things are the main key areas for the emphasis of matter paragraph. Okay. Disclosures. Let's go further. Circumstances where emphasis of matter paragraph will be given, and you have to frame your own examples. These examples you can go through. This we are done in the class, but the key point you have to remember is that, see, the main framework is company has disclosed something properly, so there is no material misstatement. So see, no material misstatement, but auditor wants to highlight it for the users of the financial statements, and for that the auditor is using the emphasis of matter paragraph, and it is related to the financial statement. Only then EOM paragraph will come. Okay, that is what the auditor is doing in this case. Okay. Let's go further. Now, other matter paragraph will come only in which case it should not be prohibited by law or regulation, and it should not be a key audit matter. So if 701 is there, 706 in the case of other matter paragraph will not come. Okay. Next, I have given here, C, the auditor will give the heading as other matter, and in this way, the auditor will present the other matter paragraph. Comfortable? Okay. Let's go to the next one, that is SA 701, that is key audit matter paragraph. Key audit matter paragraph, as I told you, it is used to enhance the communicative value of the auditor's report by showing greater transparency about the audit that was performed. The auditor is here, whatever are the important matters he discussed with the TCWG, he is filtering that, and only the most significant matters which were discovered with TCWG, the auditor is showing in the auditor's report. Okay, let's go further. Now, how do you determine the matter is a key audit matter? You will determine if there is higher risk of material misstatement. It is in relation to any significant event or transaction, and finally, it is in relation to any high estimation uncertainty. And if you see our code, this is more higher risk of material misstatement, higher estimation uncertainty is there, and significant transaction and events are related to this. Okay, only then the auditor will show it as a key audit matter. Okay. Last but not the least, you have the answer which has a code called MODG, that is communicating key audit matters in the auditor's report is not a substitute. It is not a a substitute for giving a modified opinion. It is not a separate report on individual matters. It is not a substitute for disclosures. And finally, the substitute. It is not a substitute for reporting matters regarding going concern. That is, I say, 570. That is basically covered in this part. Okay, that completes your 4 standards which are covered till now. That is 700, 701, 705, and 706. Okay. Before entering the next standard and joint audit and branch audit, what I'll request you all to do is just go through these 4 standards first. Go through it once, and we'll call this as part 1. Go through it properly. Any queries, ask me. Then after that, we'll continue with 710 and joint audit, branch audit, and CARO separately I'll give. CARO, because a separate video is already given for CARO revision. What I'll do is CARO revision, I'll put the link in the description below. So that CARO revision, you can do it separately. Okay, so CARO revision, you can easily do it in a separate manner. Okay, I'll share the link with you. Okay. Please go through this. Please go through 700, 701, 705, 706 first. First go through this. Then we'll take it up. 710 will take up. Now we are doing something called as SA 710. Then after that, we'll do joint audit and branch audit. And as I told you, I'll be giving you a separate link in relation to the CARO revision. And CARO revision is done in a very in-depth manner in that revision video. And that will attach to this video. And I'll send you all share the link with you all. Okay. Now let's start with SA 710 revision. Okay. 710 is a pretty important one. It is called Comparative Information, Corresponding Figures, and Comparative Financial Statements. तो पहले तो यहाँ पे you have to understand that corresponding your comparative information itself means comparative information itself means corresponding figures and comparative financial statement. ये दोनों को मिलके यहाँ पे बनता है comparative information. So the auditor, if he is checking in relation to corresponding figures, his opinion will be referring to the current period only, except in 3 cases which I'll tell you. Whereas in the case of comparative financial statements, his opinion will refer to each period for which the financial statements are presented. Okay. Now let's go to the next part, that is in relation to come to this part in relation to corresponding figures. Corresponding figures basically means what? That the auditor has to check along with the should the auditor check along with the current period figures, the previous year's figures also? Normally the answer is no. The client will present the current period figures along with the previous year's figures, but the auditor need not check the previous year's figures normally. However, they have said here, see, you will understand the level of detail presented in the corresponding amounts and disclosures is dictated primarily by its relevance to the current period figures. When corresponding figures are presented, corresponding figures mean last year's figures are presented, the auditor's opinion shall not refer to the corresponding figures, shall not refer normally, except in the following circumstances. They are given 3 circumstances here. Uske alawa, auditor will always give his opinion regarding the current period figures and not the previous year or the corresponding figures. Now, what are those 3 exceptions in which the auditor will also comment on the previous year's figures? So they have given here that, and I've given this example to you in the class, and now we'll do this part here. So I hope you will be able to recollect and remember. Please see here. First of all, whenever in the prior period the auditor had given a modified opinion, and in this year the company should have resolved that matter, but the matter is not resolved by the company, it is unresolved, and the matter is material, the auditor will mention the prior period figures along with the current period figures, just a second, along with the current period figures, along with the description of the matter. He'll give a description of the matter. Whenever the auditor is commenting on the matter in which last year modified opinion was given, and this year the matter is unresolved by the management, but it is not material. The matter is not material. It is coming in the case of other matters it is coming into. In that matter, you will understand that the auditor here will only mention the prior period figures along with the current period figures, but that description will not be that much. Okay, only the effects will be written, but the description will not be given in a detailed way because it is not material for this year. Next, in the last year, the auditor had by mistakenly given an unmodified opinion, but where modification was required. And then in this year, the company should deal with the misstatement and the company should correct at least in this year. But if the company has not done that, then the current period's auditor's report, the auditor will express a qualified opinion or an adverse opinion. Simple. The third scenario, and that is, sir, if the last year financial statements are not audited at all. So in this case, what will happen if the last year's financial statements are not audited only? Then the auditor will mention in the other matter paragraph that the prior period of the matter in relation to last year was not audited, that he'll mention. But the auditor in this case will not be relieved from a responsibility. The auditor will still have to do something in relation to that opening balance which is coming in this year from last year, even though it was not audited. So for that, the auditor should do procedures as per SA 510, and that is the auditor should check whether opening balances contain any material misstatement or not. That is what the auditor should check. Okay. Next, after that, we did something called as comparative information, corresponding figures, and now we are going to do comparative financial statements. So I just want you all to look at this part. Just a second. Comparative financial statements. The comparative financial statement is basically when the auditor is given the work from the client, and they are telling the auditor to check more than one financial year of the past and give them their opinion as per the client's format, as per the client's format. And that is called comparative financial statements. Now, in this case, can the auditor's opinion, can you as an auditor who's doing comparative financial statements, can your opinion differ with the opinion given by some other auditor in the past? The answer is yes. In that case, the auditor has to give substantive reasons for those different opinion which is there. Okay. Let's go to the next area, that is in relation to joint audit. Okay, so let's see this. Joint audit is not on the screen, so I'll show you on a blank screen over here. Just a second. Okay, let's go for it. Now let's do joint audit. Joint audit is a very simple, easy matter. It is a very clear distinguish between is there, and it is very easy to remember. Okay, let's do this. So in joint audit, you have basically 4 areas to be covered. Okay, 4. First is called what are the advantages of joint audit. Second is called what are the disadvantages of joint audit. Third is in relation to joint audit. What are the special considerations to be kept in mind? Special considerations of joint audit. And the fourth question that can come in the exam is the joint auditors are jointly and severally liable, in which cases joint auditors are jointly and severally liable. Jointly and severally liable. In which cases? In which cases? This will do. Okay. Now after that, we have a very simple one called as branch audit. Branch audit is a read area. You can just simply go through it. Very, very simple. And in branch audit, you have to simply just do a reading here. That is not a problem. Okay. Now in joint audit, you have to remember the advantage. Advantages are very, very simple. If you do the hand actions with me, very, very simple. Tell me this. First is sharing of expertise, mutual consultation, lower workload, lower staff development cost, lower cost to carry out the work, better quality of performance, improved service to the client, local firms, and healthy competition. Simple. What are the disadvantages of joint audit? If you remember clearly, very simple again. Tell me this: fees being shared. Then after that, you have psychological problem. Then superiority complex. Then problem of coordination. Then next point will be common concerns are often neglected. Uncertainty about the liability. Okay, uncertainty about the liability. This is how the points are covered. Okay, that completes of this area. Now, what are the special considerations of joint audit? We had done our favorite song, that is Belageddu. Okay, so Belageddu is a Kannada song which we had done. Okay, so let's do this. The song goes like this: involved in planning overall audit strategy, discussed and develop a joint audit plan, identify the divisions, reporting objectives, communicate teams efforts, preliminary engagement activities, NTE of resources, assess the RMMM, document the NTTE, common engagement letter, work allocation. It's covered in this manner. Okay. Now, joint auditors are jointly and severally liable in which cases? Again, the cases are very, very simple. Cases go in a very, easy way. It is VAD by all and FSAR compliant. This code I had given you in the class. That is work done by all, agreement by all, and decision by all. FS and AR, whether they comply. FS, whether it complies with the statute, what the statute says, and whether the audit report complies with what the statute says. For these matters, joint auditors are jointly and severally liable. Comfortable? Okay. Now that completes the revision in relation to joint audit. Branch audit, you can simply go through this as per SA 600. You can simply go through it. It's a very simple area. This explanation was done in the class with the branch audit area. I told you that if the branch auditor is, you are planning to appoint a branch auditor in an Indian branch, then it has to be a CA. Some other CA can do it, or the head office auditor can do it. No problem. If there is a branch which is outside India, then either the company's auditor can do the audit, or a accountant or an auditor as per the laws of that country, they can become the auditor. No problem. Okay. Simple to understand this area. Okay. So go through it, and I think you will not have any trouble in this. That completes the revision of chapter number 8. and the CARO link. Hi everyone, hope you're doing well. This is Kartik sir here. Today we are going to revise CARO 2020. Okay, CARO is a very important part of your CA inter audit syllabus. I always say so because you can write so many things in so many answers with reference to CARO. You can give the reference of the CARO clauses at many places. So you should know the CARO clauses very well. Okay. So let's start with the CARO revision. Let's start with this. First of all, for which companies is CARO applicable? CARO is applicable for all companies except foreign companies. However, for the companies that I'm going to say now, CARO is never applicable. You have to remember a code called 8 BOSIP. Section 8 company never applicable, banking company never applicable, 1% company never applicable, small company never applicable, insurance company never applicable, and finally, for certain private companies, it is not applicable. Now, what are these certain private companies? Any private company which is not a holding company of a public company, any private company which is not a subsidiary company of a public company, any private company having paid up capital plus reserves of up to 1 crore and having borrowing up to 1 crore and having revenue up to 10 crores. For these private companies, CARO is never applicable. Okay, so you have to remember this very carefully because CARO applicability questions they ask in the exams very often. Okay, now let's enter the CARO clauses part. Okay, CARO clause 1 is in relation to property, plant, and equipment. What all should the auditor check? You have to always remember these 5 points. Auditor should check, first we'll do this. Auditor should check whether the proper records have been maintained by the company or not in relation to tangible assets, in relation to intangible assets. Second, company auditor should check whether management has done proper physical verification in relation to the property, plant, equipment, and whether they have found any kind of material discrepancies. Third, whether title deeds of the property, plant, and equipment is in the name of the company or not. And if the title deed is not there, then you have to there is a table, you have to fill that table and you have to say then who's owning the asset, why is the company using the asset of some other person, is the asset belonging to any related party, promoter, or any employee or director of the company, is the property that we are talking about whether it is under dispute or not, that you have to speak. Next is whether there is any revaluation of the property, plant, equipment. Now when they say revaluation, they mean this. See, whenever there is a revaluation, no, auditor will definitely mention the revaluation is there. But when should the auditor mention the amount of revaluation? You should mention it when the revaluation, that is a change in the amount, is 10% or more. It can either be upwards or downwards. Remember, whenever you take the whenever you look at the asset value, you have to look at the class of the asset. Example, you will not look at one table or one chair. You will look at the furniture. The class of the asset is furniture. So you have to look at the value of furniture. Suppose if it is 1 crore, suppose the value is going to let's say 2 crores. So the increase is by 20%. So if the increase is 10% or more, or if the decrease is or the value that declines by 10% or more, then the auditor will mention the amount of revaluation also. So if revaluation is there, he'll definitely mention revaluation is there. But when will he mention the amount? He'll mention the amount only when the change is 10% or more, either upwards or downwards. Okay. Next is if any proceedings have been initiated or any proceedings are ongoing in relation to Benami Transaction Prohibition Act. So any court case that is going on with the company's name in it in relation to Benami Transaction Prohibition Act, auditor has to mention in the CARO report. So these are the 5 things. Okay, now proper records, physical verification, title deeds, revaluation, and Benami Transaction Prohibition Act. Okay. Clause 2 is inventory. In relation to inventory, the auditor has to see whether the management has done the physical verification, whether the procedure of the management is appropriate or not, and while doing the physical verification, if the value of if there is any discrepancy in the value of inventory, and if the discrepancy is 10% or more, again as I told you, either upwards or downwards, then the auditor should see whether proper entries are made in the books of accounts or not. So basically book should be proper. Next is in relation to working capital for inventory. So in this clause 2 of CARO, you have 1 point in relation to physical verification, your procedure should be appropriate, and the last one is proper records are maintained if there is a discrepancy of 10% or more. Second is in relation to working capital. If the company has taken any kind of loan from banks which is a working capital loan, for an amount exceeding 5 crores, the company must have given its current assets as security. So the bank must have told the company to provide quarterly reports, quarterly statements, so that the bank can review it on time to time basis. Auditor has to report whether the quarterly reports that have been provided to the bank, whether they are in agreement with the books of accounts. That is what the auditor should check. Okay. That is in relation to your clause 2, that is inventory. Clause 3, that is, we call it as lingu se to kofilo. Lingu se is basically loans, investments, guarantee, security. To kofilo means company, firm, LLP, other parties. So when the company gives any kind of loans, investments, guarantees, security, it does to any company, firm, LLP, other parties. In that case, auditor has to check few things. So let's see this one by one. Auditor has to first check, while providing, if the company providing loans, whether a loan has been provided to any JASU. JASU is a code that we use. JASU is for joint ventures, associates, subsidiary companies. So if the company is giving any kind of loan to joint ventures, associates, subsidiary companies, then in that case, the auditor has to mention in his CARO report the aggregate amount of loan given during the year and the balance outstanding on the balance sheet date for loans given to JASU. This point has a separate area also, that is basically loans which are given to other than JASU. So if you give a loan to other than joint ventures, associates and subsidiary companies, then what is the aggregate amount of loan given and what is the balance outstanding on the balance sheet date, that you have to mention. Simple. That is your first area. In clause 3, second part, auditor has to check whether terms and conditions should not be prejudicial to the interest of the company when the company is giving any kind of loan, guarantee, security. Third, when the company is giving any kind of loan, it means it is also, it will take the EMIs whenever the installments are being paid. It can be your monthly installments or yearly installments, however the other party is paying, whether there is a repayment schedule or not. So auditor will first check whether there is a repayment schedule and whether repayment schedule is followed regularly or not. Okay. Second, if the amount is overdue for more than 90 days, then whether reasonable steps have been taken for recovery or not. Simple. In the end, the auditor will also mention in the CARO report this important area. See, during the year, if any loan has been renewed or extended or fresh loans have been given for existing loans, then in that case, the auditor should mention the amount that has been renewed, extended or fresh loan that have been given. And second thing, the percentage of the amount of renewal, extension of loans or fresh loans for existing loans to the total loan that was given during the year. So during the year, suppose the loan that was given was, let's say, 100 crores, and the loan that was given to any related loan that was given for loan that was renewed or extended or fresh loans were given for existing loans are, let's say, 25 crores. Then the percentage becomes 25%. Okay, no, 25%. 25 crores divided by 100 crores is equal to 25%. Okay. Similarly, last point is also very similar in this clause 3. When the company must have given any kind of loan to any related party, promoters, the auditor will mention the same two things: the total amount of loan given and the percentage of the loan given to related party and promoters to the total loans that the company has given. Suppose to the related parties and promoters we have given 10 crores loan and the total loan that the company has given is 100 crores. So you understand the percentage is 10%. Okay, that is basically this area. This is completes your clause 3. Clause 4, your lingu say under section number 185 and 186. So basically, whenever the company gives any kind of loans, investment, guarantee, security, you should comply with section number 185 and 186. 185 and 186 is mainly there in CA final. 185 deals with loans to directors and 186 is inter-corporate loans and investments. That covers this part. Simple. That is basically this area. Next is your clause 5. Clause 5 deals with acceptance of deposits. If the company has accepted any kind of deposits, the auditor should check 4 things. First is whether RBI directions have been complied with. Second, whether rules which are framed for deposit acceptance, whether those rules have been followed or not. Third, whether we'll take the 4th point just ahead, that is whether section number 73 to 76 has been followed. And if suppose RBI direction rules framed section 73 to 76 have not been complied with, then basically the company will face some kind of an order will come from a higher authority. So order can come from courts, company law board, national company law tribunal, any other tribunal, RBI, whether those orders have been followed or not. That is what the auditor is checking basically. Easy. So auditor is basically checking rows. What is rows? RBI direction, rules framed, RBI direction, rules framed, okay, order of the authorities which I told you, that is court, CLB, that is Company Law Board, National Company Law Tribunal, other tribunals, RBI, and SE in the end is section 73 to 76. Okay, so it is R square OSE. E is small. Okay, E small means it is SE, section SE. Okay. Next is your clause 6, whether cost records have been maintained properly under section number 148 subsection number 1. Next you have clause 7. Clause 7 talks about statutory dues. Now whenever statutory dues comes in the exam, you have to see whether it is undisputed or whether it is disputed. If it is undisputed, as on the last day of the financial year, if the statutory dues which are there, which the company had to pay, these are undisputed, means there is no fight with the government, with any authority. We know that we have to pay this much amount. So the undisputed statutory due on the last day of the financial year is overdue for more than 6 months. It means we have not paid the amount from the due date and more than 6 months has passed. So in that case, the auditor will mention in the CARO report. Simple. Second is your disputed statutory dues. Whenever the statutory dues are disputed, the auditor will mention the amount of dispute and the forum where it is pending. Forum basically means your Commissioner of Income Tax or Income Tax Appellate Tribunal or Commissioner of Customs. So whichever authority is handling that matter. So where the dispute is pending, you have to mention the forum. Simple. This is your clause 7. Clause 8. Whenever there is an undisclosed income, company had not showed some income, and that income was suddenly disclosed in this year, whether proper entries have been passed in the books of accounts. Basically, accounting treatment should be proper. That is what the auditor will check. There is our clause 8. Clause 9. Clause 9 is in relation to repayment of loans. So whenever this point is there, repayment of loans, you should keep in mind, for repayment of loans, company should have accepted some loan, correct? No. So if the company has accepted the loan, the auditor will do something called a DP Jasu. Okay, no. DP Jasu is basically D, P, and Jasu. D has 2 points, P has 2 points, Jasu has 2 points. D means default. If the company has made any kind of default, the auditor should provide lender-wise details. Lender-wise details means each bank-wise. Suppose if I have not paid loans of 3 banks, HDFC Bank, ICICI Bank, and Canara Bank. So I should provide the details in that format. So I should say HDFC Bank how much I have not paid, ICICI Bank how much I have not paid, Canara Bank how much I have not paid. That I should provide. That is called lender-wise details. Second, D is if the default is there, if the bank or financial institution has put the company under willful defaulter list. If the company is a willful defaulter, then the auditor will mention in the CARO report. It is like telling the shareholder, see, the company that you are investing in, that company is a willful defaulter. Okay, it's like that. Simple. Next is in relation to your P. P is in relation to loans which are taken should be used for their particular purpose. Second, short-term loans taken for long-term purpose. So both the P's are from purpose. Okay. JASU basically means this. See, if the company takes any kind of loan from the banks, and if it is meeting the obligation, they are taking the loan, and from that loan they are meeting the obligations of their joint venture associate subsidiary companies. Okay. In that case, the auditor will mention in the CARO report. Second, if the company is taking loan from the bank and the company is pledging the shares of joint venture associate subsidiary companies, pledging the shares. So they are taking the loan and you are pledging the shares of the joint venture associate subsidiary companies. That will also come under this category. Okay, that will also be covered in your clause 9. Okay, that is your DP JASU. So 2 points from D, 2 points from P, and 2 points from JASU. Next is in relation to clause 10. Clause 10 is whenever the company is doing any kind of IPO, FPO, any convertible securities the company is issuing, debt securities are there, private placement is there, preferential allotment is there. In that case, whether the amount the company is giving some kind of shares or debentures company is issuing, correct, or any security company is issuing. So when the company takes the money, whether money is used for the proper purpose or not. Okay. So for example, when you are doing the IPO, we must have mentioned that in the prospectus, correct? So in the prospectus, whatever we have mentioned, whether the money is used for that purpose or not. Simple. That is your clause 10. Clause 11, fraud. The auditor should mention in the audit report the amount of fraud, the nature of fraud. If any fraud was reported to CG under 143 subsection number 12, now you know this very well because if the amount is 1 crore and above, you have to report to the central government. And last but not the least, that is any complaints of whistleblower that the auditor has considered. So some whistleblower must have told the auditor, see, this director is doing some fraud, this person is doing this fraud. So any such complaints have we taken into consideration or not? That the auditor will mention in the CARO report. Clause 12. Clause 12 is about needy company. So a needy company, what they have said is, the auditor will check 3 things. First, whether net owned funds to deposit ratio is 1:20. This I've explained in the class, so I've given examples for this. Second, if the deposits that the needy company has collected, 10% of the deposits should be unencumbered. Unencumbered means not blocked. Okay. And finally, when the needy company accepts deposits, they have to pay interest on time, and at the end of the period, they have to pay the principal amount to the depositor, to the person who is giving the money. So in this case, if there is any default in relation to interest or the principal amount, that the auditor will mention in the CARO report. Okay, that is basically your clause 12. Clause 13, related party transaction. Related party transaction, whether they are complying with section number 177 and 188 of the Companies Act 2013. That is what the auditor will check. Clause 14 is in relation to internal audit. Auditor will check two things in this: whether internal audit internal audit department of the company is commensurate with the size of the company. So auditor will see whether internal auditor is also as good as how big the company is, basically. Second, the statutory auditor will mention whether he has considered the report of the internal auditor or not. That he has to mention. Okay. Clause 15. Clause 15 is in relation to non-cash transactions. So if the company has entered into any kind of non-cash transactions, whether section number 192 of the Companies Act has been complied with or not. Okay. Next is clause 16. If the auditor is doing audit of an NBFC, whether the NBFC is properly registered under section 45 IA of the RBI Act 1934. Second, if the NBFC is working with proper certificate of registration or not. Third, is the NBFC a CIC? CIC means core investment companies. Core investment companies are those NBFCs or those investment companies which only invest in the group companies. So I gave the Tata Group of Companies example in the class, so you should recollect that. Okay. Next is in relation to the number of CICs. So basically, if we are one CIC, in our group of companies, there are, let's say, other two CICs. So we should mention that we are one CIC and there are two other CICs in the group that you have to mention. Next is clause 17. If the company has suffered any kind of cash loss in the current year and the previous year, that the auditor will mention. I think as an investor, this point is a very important point to see as an investor. Okay, so if you are trying to invest heavily in some company, you should check this, whether company is going into any cash loss. Company has done any cash loss in the current year or in the previous year. Okay. Next is clause 18. Clause 18 says that the auditor should mention that was there any resignation by any statutory auditor in that year. See, if any statutory auditor has resigned, then the new auditor who is appointed is you, because you are making the CARO report, because you will be the auditor who will stay till the end, correct? So if the new auditor is appointed who is going to stay till the end, some auditor has resigned there because some auditor resigns and there was a casual vacancy and you filled the casual vacancy. So now you are making the CARO report. Okay. So you have to mention that during the year one person had one statutory auditor had resigned, and you have to also mention whether you have looked into the issues and concerns that the previous statutory auditor has raised at the time of resignation or not. That you have to clearly mention in the CARO report. That is your clause 18. Clause 19 is in relation to whether company is capable of meeting its liabilities or not in the next 1 year. So from the end of the year, that is from the balance sheet date, for the next 1 year, whether the company is capable of meeting its liabilities or not. For this, the auditor should check 5 things. Very simple. Auditor should check the financial ratios, financial assets aging, that is basically debtors aging report he should take, the company's capability of paying the financial liabilities, the information given in the financial statements, and finally the last point, that is in relation to the management's plans with the company. So looking at these 5 points, the auditor should see whether the company has capability of meeting its liabilities or not. Okay. Next is clause 20, whether the company is transferring the funds to the special account, that is unpaid dividend account, in the case of ongoing projects, and in the case of other than ongoing project, where the company has transferred the fund properly to the fund mentioned in Schedule 7. So whether these two transfers have been made as per section number 135. And 135 we had done when we did CSR area in law. So whether the company has done these two transfers properly or not. And clause 21 finally is the CFS related matter. If there is any qualification or adverse remark in relation to the matters which are given in the CFS, auditor should give a proper correlation to that in the CARO report. You should mention the adverse opinions and the qualified opinions properly. That is what they are given in CARO. Simple. So this covers all the 21 clauses of CARO. And plus we saw the applicability part. In my opinion, applicability plus all 21 clauses, you should take that as the complete chapter. Applicability plus all 21 clauses. You should see it very carefully. Okay. I wish you all the best. Study well. If you like this video, please like it. Okay. On YouTube also. And if you want more such videos, please type in the comment section below that you like this video and you want more such videos. And I'll give this, snapshot revision video so that it is easier for you to revise it on the go or when you're traveling or anytime when you're getting free time. In quick way, you can revise. Okay. One more information. Any queries that you want to ask me in relation to audit or law, you can ask me on Instagram at ca.kartik.iyer, ca.kartik.iyer, and I'll be happy to answer your queries. Okay, but when you answer your queries, ask it in a proper manner with a proper, image or send something you're sending that, sir, what can be the answer to this, something like that. I'll be very happy to solve your issue. Okay, take care. See you. Bye.